Good morning, traders. It is 9 a.m. Eastern on Wednesday, the 27th of September, 2017. Thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance right now is just slightly bullish. The S&P 500 is pushing against yesterday's high. The overnight high is at yesterday's high on the dot. The leader today is the Euro Stoxx 50 in Europe, trading up 0.77. The dollar is strong today, up 0.66%, trading at 93.39 on the December uh, dollar index futures contract. Gold is weakest, of course. The dollar strongest. It's the inverse of that equation. Gold is off 1.09%, trading at $1,287.50, followed by the U.S. Treasury bond, the Japanese yen. That tells us that money is moving to safety. When we look at the Treasury and the yen, they are down almost 1%. The Treasury is down 1% from yesterday's close, and the yen is down 0.9%. That's quite heavy for those fundamental products. So it seems to me like we are moving to money is being allocated to risk this morning. The S&P yesterday pushed the prior day's high by a tick, couple ticks, and we'll discuss that today. We'll go over that. As far as what we're looking for today, moving ahead, as I said before, the format is changing so that I'm not discussing news and what's driving the overnight session. You can look that up yourself. As far as what's driving us moving ahead, the only thing I see on deck um, in terms of economic releases is a pending home sales at 10 for August, expecting negative 0.5, and then we're looking for gasoline inventories, U.S. distillate inventories, and crude oil. Look up those numbers as well. That comes out at 10:30. The energy inventory. And then we have a bunch of Fed speakers or central bank speakers. We already had one ECB speaker earlier today, and then we get the Bank of Canada speaker at 11:45 Eastern. At 1:30 we get Fed speaker Bullard, and at 2 we get Fed speaker Brainard. Those have not been moving us around much. I think the market's already aware of what the Fed is likely to do. So there's not much stock being put into what they say. Let's take a look at what we expected yesterday versus what we actually got. Yesterday's primary hypothesis, if you remember, I spoke about the strong potential for resistance around, oops, strong potential resistance around 2502. And the expectation yesterday is that we continue to move up from Monday and head up into the point of control, 2501 quarter, get tangled up in that area, and then fall back into the range later in the session. That isn't quite how it worked out. This hypothesis didn't play out. So we move on to hypo 2. Hypo 2 test up early, test that point of control early, 2501 quarter, and then fall back in a range and then look for a test of the point of control from the prior day at 2492 and then finish higher on the close. This is basically what happened yesterday. Here it is. This looks noisy. Maybe it's better to see it on the 15-minute first. So here's where yesterday was. This is when we did our trader bite. This is where we finished up. And as you can see here, we opened, we pushed into the prior day's point of control. There it is, or the naked point of control. And then we pushed down into the naked point of control on the prior day. And that's all she wrote. Here's the expectation, right? Push up into the prior point of control there. Push down into the prior point of control. Hypo 2, we expect when we hit a point of control, we expect the market um, to fight there or get tangled up in that area. It's a high volume area, which means acceptance, which likely means that both sides will participate. Both sides participated at that price the day before. That's why it gets a lot of volume. If both sides did not participate at that price, you would not see any volume at all. It would be a low volume node. So we expect it to get tangled a little bit, and then we're looking for a run up on the close, as you saw there. Uh, and here's what we got. We got a bounce instead of a tangle, and then we ran up, and then we stayed up here for a while. We ended up selling on the close on relatively high volume on that last bar. There was a fair amount of selling going on there into the close. So it was looking kind of weak coming into the overnight session. If I expand this profile, we have basically a kind of a Christmas tree profile here. That shows lack of consensus. There's really the value area is valid here, but but overall there isn't a clear consensus or a clear Gaussian curve or a D-shaped curve. I'm still looking at the value area today because a lot of trading happened in that range and it was uh, consolidated together, but overall the market had multiple areas that it perceived as value, so that we got high volume in those areas. Again, it's a more of a Christmas tree, half Christmas tree shaped profile, and not showing us that there's consensus. There's a little more consensus to this profile here. As you can see, it just tapers as you go up, tapers as you go down, and is bulky somewhere close to the middle. Here we don't have that. So the markets were in discovery mode yesterday, and as we carry that, oops, let's see, as we carry that into the overnight session, we see the market coming back here. It opens, it opens, it does not, it's not able to get to the closing swing low right here at 93.5, and it pretty much runs up the entire night back up to 25.01 quarter, which was put in earlier in the session yesterday, and we're right up against it. So what we have here is sort of a saucer kind of formation, a kind of a stretched out cup and handle with a pivot at 25.01 quarter, and a likely break higher. So remember, we still have that resistance, strong resistance area, in my opinion, above. If we look at the weekly showing us one time framing up, starting to one time frame up again on a daily. So this was Monday. The gold is Monday. This is all Monday's trading. This is Tuesday's trading. And when I squish these profiles together, you'll see that we extended the range up, and we were not able to get back to the get back and hold the lower acceptance area, and so the market's showing a little bit of strength here. So we're very, very likely to push into that 25.02 and 25.0450, which is really important up here. That's what's likely to happen today. Yesterday and Monday, I did talk a lot about the strong potential for a move down, and we got that on Monday, but just like every other move we've had on the downside, we've basically bounced right back up, and we're holding near highs here. So let's take a look at what our expectations are for today. Okay, let's expand the scale here a little bit. So overall, the market's trading right up against the high. It just pushed the overnight high to 25.0150. The expectation is for an open auction that is likely to dip early. We have some decent support at 21.99. I'm expecting a bounce there initially. I'm looking for initiative up, a small initiative rotation up, pull back to the open, and then continue to 25.04, 75, 25.05, which is the MC point of control, and hang right here. This is hypo 1. Okay, so overall, I'm looking for the market to dip down, test the sellers, see if there are more sellers coming in, find its buyers, rotate up, and then hold prices into the MC point of control today. Alternatively, sorry, one second. Alternatively, we're looking for an open test drive up, pushes us into 2505, and then we hold steady, dip, and then we put in a higher high, higher low with a profile that's a double distribution higher, a double distribution higher. So I'm looking for it to open again out of range, slightly out of range, uh, test down, and then drive up, and then consolidate, and later break lower, just like we saw on Monday a little bit, and then hold sideways. The market's regaining ground here, and it's starting to shift back up. It's reestablishing this um, this trend that we've had that pushes us back into value. Okay, so that's hypo 2. All right. And then if we extend out what we've done, if we look at how this profile is building, so you see it dropping. That's the anticipated drop on Monday, which we actually got. There it is. And then you see this profile building below, but it's not really spending that much time below. You see that it's very quickly starts to move up and fill the middle. See? It's filling the middle, filling the middle, filling the middle. And we have basically a boxy profile here with a clear delineation of where the market rejected prices at 94, the prior MC point of control, and it's holding steady in this thick range, and that's where we are. And that's why I expect it to push up, tangle, and then stay in this area right here as I outlined in the hypos. Anyway, my 10 minutes are up. That's all I had for you for today. Good luck, and I'll catch you tomorrow. Take care.